What's going on, everyone? I hope you're all doing well. Welcome back to another week of what I like to call Mind Over Markets. Thank you all for tuning in. If you are here live, make sure you come and say hello. I will keep an eye on the comments throughout today. I will try and leave a little bit of time at the end if there are any questions, if there's anything that you'd like clarified, if there are things that you want to throw my way that you want reviewed and maybe my 2 cents on from a performance and a psychology standpoint. I want to make these as interactive as possible. Today, I want to talk about a very, very important topic. One that, in all honesty, and again, I always like to come to these sessions correct, transparent, one that is very close for me at this very moment in time, but I think is a real eye-opener when we think about longevity in this space. So today's session is all about the art of recovery. Now, I'm going to give this some context as to how we dive into conversation today and the reason why I think it's such a fitting topic for today. But I do want to mention this is actually going to be one of our last bi-weekly sessions together. And I think this is probably a fitting session to wind things down on because, in all honesty, over my 10 plus years in the market, this has been probably one of the biggest lessons that I have come to learn and come to respect over the many years in this game. I have seen many people over my time that have made extraordinary amounts of money. I have seen many people that have never made any money whatsoever. And I have learned a lot from those experiences. The one thing that has really been ingrained into me over time is to have a deep, profound respect for risk management and really prioritizing operating in a way which gives you longevity in this game. As I mentioned, I have seen people that have made an extraordinary amount of money in a very short span of time, but without the right approach towards longevity in this game, without really understanding how to recover from certain situations or even preventing yourself from getting into those situations to begin with, it's very, very difficult to survive in the long run. And that's one thing that I think if I could kind of wind these sessions down on and impart into you in terms of the importance, I think that would be a very, very fitting topic for the day. Now, the reason I think it's important to talk about this, because I had this false illusion when I was kind of learning the ropes in my trading that profitability or, consistent success, compounding in the markets was all about this degree of perfection, figuring things out, understanding how the markets move. And honestly, I think the place that I have ended today and the experiences that I've been able to have, very fortunate to have, where I connect with some really successful traders, I have found that they all have one very similar message. And that is profitability is not what it's made out to be online. It's not this constant flow of sunshine and rainbows and the market's just becoming this ATM that you can just print money from. And that's a mindset that we have to be able to detach from. I find the people that end up doing the best in this game and the ones that really have longevity in the long run, they also have days which are hard. They are frustrating. It's difficult. It's stressful. Sometimes they break rules. Sometimes they have off days. Sometimes they will go through periods in the markets where performance is not just optimal. And this is why the whole idea and the narrative around our session today, the art of recovery, is about learning how to deal with these moments to actually overcome them in the most productive way possible. That's not going to have a huge impact on your performance when and if they hit. In my experience, I have found that this is actually not an if game. It is a when game. Having a game plan of what you're going to do both mentally and strategically for when that moment hits is very, very important to be able to deal with that bounce back. That bounce back and your ability to be able to do that is what will give you longevity in this game. I promise you this, if you're somebody that's watching this and you're hoping to get to a stage where you believe things will get easy and you will always make money and you will never make mistakes and things will just always go your way in the most blunt and honest way possible, I truly believe you're living in a delusion. I have never seen it, not from myself, not from other people who have far superior skill and knowledge than I do. They all seem to speak the same story. Trading is inevitably one of the most difficult things that you could do. And it's not just because strategically it's hard, but mentally it can be difficult to deal with and come back from these moments of time. And that's what I really want today's session to be focused in on. What's up, Momo Trader? Hope you're doing well. Thank you for saying hello. And again, for anybody else that is watching this live, make sure you come and say what's up in the chat. I will be keeping an eye on comments and questions throughout the span of today's session. So make sure you come and say hello. Now, as I mentioned, I always like to be as transparent with these sessions as possible. And a lot of the time that I host these and I come up with topics and conversations and things that I want to speak about and share, they have come from either experiences that I have been through or currently experiencing at this moment in time, or they have come from conversations, situations, perspective shifts that I have gained from being able to talk with and meet and discuss topics with in terms of, you know, many other aspiring and consistently profitable traders. Today's topic comes from a personal experience. And this is one that I actually haven't had a chance to share. I didn't talk about this much on our last session together, but it is one that I do want to talk about today because, like I said, I think it's very, very fitting for a moment in time which you will indefinitely experience at some point, right? Inevitably, it's going to happen to each and every one of us. Now, like I said, I always like to keep these as transparent and as honest as possible. And they're not always the easiest things to talk about, but I believe transparency is key as part of everything that we do. Towards the end of February, it was ironically, I figured this out as I was planning this session and went back through my calendar. It was the day after we hosted the last session that we had in February together. I took a trade and I broke one of my rules. It was one of my rules regarding entry criteria. It got me into a position that I essentially should not have taken. And I would like to say, with the benefit of hindsight, I'm very thankful that it actually cost me money. It cost me an additional 1R in profit for that month. Now, in all honesty, in reflection on how February went for me, it was a poor month overall, largely to do with market conditions and my edge just not really working great in those conditions that I experienced. But I should have ended the month negative 2.8R, but because of my process-orientated slip, I ended the month minus 3.8R. Now, some of you will listen to that and you'll say, it's not the end of the world. It's a 1R mistake. You didn't blow up. You didn't lose your account. You didn't get margin called. Yes, for sure. All of those things are true. But I put a lot of emphasis on making sure that I am aware of these moments. And I put a lot of emphasis in making sure that these small mistakes don't compound into big mistakes. Because I truly believe that every big blow up moment that anybody experiences, it starts off as a small crack. It doesn't appear out the blue. It starts from misaligned thoughts, misaligned expectations, a small breach in your process, your risk management, your exit, something that you accept and you don't question at the time, which compounds and it turns into something much larger, which then creates this big blow up moment, which I think ultimately we all have to avoid. Now, I don't say this because I have anything that I'm proud of when I talk about breaching my rules. It's actually, and I remember checking this at the time, it was the first rule breach that I had had since October 2025, which in all honesty is something that I give myself credit for, something that I pride myself on. I have gone a long period of time where I have done everything in alignment with my plan, even when it hasn't been easy. But last month, I did have that slip up. I tend to find, and something that has at least been my experience over the years, that becoming a better trader and being more consistent with your performance is less to do with the fact that mistakes and poor market conditions never occur. It's more to do with the fact that you actually get better at dealing with them when they do happen. So the message and the opening statement that I want to start today's session on is I want you guys to understand that your ability to perform well as a trader is not solely to do with your strategy. It's not solely to do with your psychology, but I think a big part, which is often not discussed enough, is actually you're defined by how well you recover from imperfect moments in the market. Now, let's define imperfect, because that can mean various different things depending on the person, depending on the context, depending on the market conditions. Sometimes imperfect is going to be directly related to you as the trader. And that was most definitely me, right? I look back at the mistake that I made, and I kind of brushed over one of my entry criteria, thinking that I would front run it. And by the time that I was tagged into a trade, it would have met my final criteria. And lo and behold, I was tagged in, and it didn't. Had I waited for that final confirmation, it would have saved me from a loss. And that's something that I would have experienced when backtesting, when collecting data. And hence, this was something that was most definitely outside of my rules. It was, I don't want to say for me in that moment, it was an emotional decision, but it was definitely impulsive. And I think being able to define exactly where you slipped up is very, very key. For some of you, those decisions are most definitely going to be emotionally driven. Some of them are going to be due to maybe impatience. Maybe some of them are going to be for you that are forcing trades, or just simply used to or have a habit of breaking your rules, and you're comfortable in doing so. But you need to be able to identify that in that situation, it is you that's the problem. It's not the market. It's not the market conditions. It's you. And often there are going to be things that you experience that have nothing to do with trading, but have everything to do with the trader. And that was, I think, what I had experienced at the end of last month. I never had bad intentions. I never intended on breaking my plan. In fact, in that moment, I justified to myself as to why that was actually the most logical thing to do. And it felt like the right thing in that moment. It was only in hindsight, looking back, you start to realize very quickly that I had talked myself into doing something that my plan determined was not going to be optimal for implementing my edge over time. But when I reflect back on exactly how and why we came to that situation, there was a lot going on both in my personal and my professional life that had led to that specific moment. And these are all things that I had been aware of, but never put maybe as enough weight on those experiences that were truly needed. And I say this again, purely to be transparent, but because I know for a fact that there is going to be at least one of you, a group of you, every single one of you at some point in time that's going to be able to resonate with exactly what I experienced. Maybe you're going to have tension in your day job. Maybe your business that you run is going to be stressful. Maybe your sleep is not going to be optimal. Maybe your relationship with your partner, your family, your friends is going through a turbulent time. Again, none of these are problems to do with the markets. Conditions could be optimal. Your edge could be on paper flourishing in the current conditions. But if you as the trader don't have an ability to execute consistently or think clearly or make those good decisions in alignment with your edge, it's going to have an impact on your performance. And I think that's what was catching up with me over time. There was a lot changing in my business. I had a lot going on and still have a lot going on personally. And these are things which I am weighing up in my mind as to, how I got to that place and how I'm going to go about recovering from that, which is exactly what I want to talk to you guys about today, almost essentially in real time as I go through this in the moment, right? But this is one side of it. Sometimes it's you, and on other occasions, it's going to be the market. And this is, I would say, the one that you probably want more of. You want, periods of underperformance or slow or choppy performance that to be down to the market conditions more so than you actually being a hindrance for your trade plan. But sometimes it is just going to be poor market conditions. Maybe it's just going to be low volatility. Maybe it's going to be too much volatility. Maybe conditions in some way, shape, or form are just not going to be optimal for your edge. And these are things that you need to be mindful of. There are going to be some of you that flourish really, really well when markets are trending and moving in, vast, expansive ranges. And there are going to be some of you that prefer choppy, range-bound conditions because you're a short-term trader and you trade from one level to the next. Again, it's going to be different depending on your edge in the market. But the reality is always the same. When conditions are not optimal for your specific edge, you are likely to experience chop, a slow period, breaking even, a period of drawdown, a losing streak, something that's going to impact you in some way, shape, or form. Now, the issue that most traders have in that moment is actually not understanding what is the true problem for what they are experiencing. A mistake that I always fell into is early into my journey, if things were not going correctly, I would immediately blame my strategy, right? I would immediately presume my strategy is broken, it didn't work. I would work on tweaking and changing things over time, not understanding that the inconsistency in my approach was the largest thing that was leading to inconsistency in my results. And so I think step one of the moment you are going through a period of time where things are maybe not going to plan is you need to take a step back and you need to understand, where are things breaking down? Is it me? Is there something going on with how I am approaching the markets compared to what my strategy should be producing over time? And is that something that needs to be addressed? Or am I doing everything absolutely perfectly and it is simply just the market conditions that are not working out so well in my favor? It's a very, very important distinction, because how you overcome that problem really depends on why you're experiencing it. If you're someone that immediately tries to fix everything, or you immediately increase or reduce position size, or maybe you increase or decrease the frequency of your trading, all of these things are going to have an impact. But depending on why you're experiencing the problem to begin with, will depend on what sort of impact that really has for you, right? So I always find the real danger is sometimes not the you as the person. Sometimes it's not just the market conditions, but it's what comes next. If you don't truly understand what's going on beneath the surface, if you don't understand why it's happening in the way that it is, then it's very easy to fall into the trap of trying to fix something which truly isn't broken. And that next action becomes the biggest reason as to why you don't have consistency behind everything that you are doing going forward. And this is something that you really want to keep in mind. And I speak this purely from a place of experience. My first few years of my journey were completely engulfed by this type of behavior. I presumed everything that happened in terms of a lack of my consistency and results in the market, I presumed was immediately an issue towards my strategy. And I presumed that's the thing that needed to change. And ultimately, sometimes, yes, it was just conditions, and fixing my strategy when it wasn't broken wasn't optimal. And sometimes, in all honesty, it was me. And that's what I can definitely resonate with last month. Last month, yes, the conditions were poor, most definitely. But the reason as to why I slipped up was largely, it was a me problem. Until you address that, until you have awareness of that, then actually fixing it and taking just blind action is never really the best way to go, right? Now, I find in a lot of situations, and again, I can tell you wholeheartedly, had this have been 7, 8, 10 years ago, the situation that occurred for me at the end of last month would have ended very, very differently. I used to live through a pattern whereby maybe it was a small loss or a mistake, or a market condition that I didn't like or wasn't wanting in that moment of time. It would create an emotional reaction. That emotional reaction would create a behavior shift. That behavior shift led to a bigger mistake, and that bigger mistake led me to ultimately end up on tilt, and I would lose control with what I was doing. My biggest issue at the start of my trading was I was simply a slave to my emotions. And as everything that we prioritize here at Darwinex, you have to understand that actually the biggest thing towards consistency in your outcomes has to be with consistency of how you approach this game. If you are someone that chooses to be the person that clicks the buttons, makes the decisions, goes through the thought process of X, Y, and Z before you actually act, you have to make sure that both psychologically and strategically, you are operating in a way that allows you to be consistent. I truly don't believe that you can have an inconsistent input and still expect inconsistent output from the market. And by consistent, I'm not referring to making money daily or weekly or monthly. We're always going to have periods of underperformance, whether that's on us or on the market. But you have to make sure that you are putting yourself in the optimal state to give yourself the best odds of making money in the long run. What I find most traders end up doing wrong is they put too much emphasis on short-term outcomes, and it's the reaction to that short-term outcome which causes the longer problem. Taking a 1 hour loss like I did last month in isolation is not a problem. Taking a 1% loss, going through one losing week or one losing month, these are not like categorically going to allow you to blow up and completely ruin your performance in one day as long as you are managing risk. It's your reaction to that moment that ends up creating most of the damage. And that's the part that nobody puts enough emphasis on in the long run, right? So some really common examples, one that you will probably relate to, and one that I was definitely mindful of last month. You experience a natural loss as part of your edge. You did everything right, but you experience a natural loss. It causes a sense of frustration, and that frustration leads to a revenge trade. You get annoyed about that revenge trade, and it leads to many more bad habits going forward. And again, you end up in a place where ultimately you just don't want to be. The second and a very common example is missing a trade, right? Again, if you're someone that doesn't just trade for a living, and maybe you have other priorities, maybe just life gets in the way on occasions and you miss a move, you come back to the charts, you feel like you've missed out, and therefore you are more likely to chase the next time a potential signal presents, which leads to a poorer entry. And that's what will burn you in the long run, right? The one that I was very mindful of last month was a rule breach, which typically for more opened the door to having one more rule breach because I wasn't mindful of what I was doing or the long-term impact of that. And then it escalates into one further breach. Today it starts with entry. Tomorrow it's risk. The following day it's exit. And by day 4 or 5, I'm not even trading my plan anymore. Those are the moments I'm trying to avoid. In pure isolation, a single loss, a mistake, a period of poor market conditions, they don't compound. Those things will always ride out, and those things will always change and potentially recover over time. The one thing that does compound negatively for each of us is our behavior. And it's the one thing that a lot of us don't put enough emphasis on when it comes to thinking about longevity in this game. So what I want to talk to you guys about today is the protocol that I go through, both in terms of psychologically and in terms of strategically what I'm doing to help me recover from these moments. Because yes, they're not great to talk about. Yes, I'm not proud that I broke one of my rules last month, but I'm also not ignorant to believe that this is going to be the last time that it happens. We as human beings are imperfect beings. If we are expecting perfection in any way, shape, or form based on our behavior or the market conditions, I truly believe you're setting yourself up for failure. I tend to believe that some of the most successful traders are the ones that have learned to find a degree of consistency in a field of imperfection. They have learned to accept that imperfect either market conditions or behavior is a normal part of this game. And we have to understand what is the best way to approach this in order to bounce back from that moment, to figure out how to actually survive in the long run. And this is something that I have been prioritizing a lot as part of what I've been doing over the last few weeks. Okay. So the first thing that I want to start with is talking about the psychological impact of actually being able to recover in certain situations when either a mistake or a poor market condition has actually presented. The first thing that I think a lot of traders tend to lack in this situation is actually an ability to be able to detach from the actual event itself. That was the first thing that I was thinking about after I realized this was a red flag as part of me executing my process. My immediate thought process wasn't, how do I make this money back? How do I fix this? How do I correct this? The immediate thought process from my side is, I need some space and some time to be able to detach from this moment, to understand how to actually gain some perspective and actually start to recover, right? For most people in that moment, when you make a mistake, when things are off, when conditions are not optimal, it's so easy in that moment to just label them a bad week or you're just off your game. and immediately think that something needs to be changed and fixed going forward. That is not always going to be the case. What you have to understand as a probabilistic thinker, and that's the only way I believe you succeed and win in this game in the long run, is you have to understand that short-term outcomes are nothing more than data points. Now, it's easy to say that talking in this environment, right? On a call where there's no money on the line, there's nothing at stake here. It's very hard to do so when you've actually got your ego on the line, money at risk. These are all things that we lose perspective of in the moment. The problem is what we tend to suck at as human beings is we tend to spend most of our time zoomed in. We tend to spend most of our time zoomed in and focused in on short-term moments, which don't necessarily depict a great idea of how things will work in the long run, right? I want you to understand that anything that happens in the short run can be more likely attributed to randomness rather than skill. That's the way I choose to see and believe things over time. It's only with the perspective of time and a large sample size of data can you determine anything probabilistic is happening. If I was to stand here today and I was to flip a coin, I couldn't accurately tell you with 100% guarantee that if I call heads, it's going to land on heads, even if I flip it with the best and most perfect technique. It's a game of probability. Sometimes it's going to be heads and sometimes it's going to be tails. And we have to start thinking of our trading strategy in the same way. Sometimes you're going to win, sometimes you're going to lose. It's not the outcome that should be the point of focus. It should be the risk management that supports that, right? As the age-old saying goes, it's not about right versus wrong. It's about how much do you make when you're right versus how much will you lose when you're wrong. Anything in the short term, as long as you are managing risk, should purely be seen as just one more data point, which goes into building my edge over a much larger sample size. So the first thing that you need to do when you've had this slip up, this challenge, this hurdle that maybe you have experienced is you need to take a step back. You need to understand that this is just another piece of data and you need to detach. And in my honest opinion, I think the best way to do this, and again, this is no magical wizardry or eye-opening information which should come as a surprise to most people. It's just to take a step back and have some time away. That was the first thing I did. I closed up my trading. The mistake for me happened on a Wednesday. I didn't trade the Thursday or the Friday. And I didn't come back to the markets to take my next trade until the following Wednesday. I had almost one full week out of the markets. And that time away gives you time to accept the situation for what it is and not what you wish that it could be. That's a paradigm that most traders get stuck in, but never figure out how to actually separate themselves from, right? It is always just a metric of data. The moment you take that space and you actually detach from the event, you stop opening your charts every single day, it actually gives you the ability to develop what I like to think of as a superpower in that moment. And that is just an ability to zoom out, right? It gives you an ability to actually understand that one trade means nothing. One session means very little. 1 week is just randomness. You have to start training yourself to think in months, in quarters, and in years, right? The advice that I constantly give myself, and I tell other aspiring traders to think of this in the exact same way. If you have taken a loss, or you have had a bad week, or you're currently going through a tough period, if you're still going to be thinking about this in 6 to 12 months' time, you're probably risking too much money, right? If it's playing on your mind that much and you don't think you're going to be able to recover and forget this moment in 6 to 12 months from now, you're probably risking too much money. You probably have too much at stake. You're probably too emotionally invested in what you're doing, and you would probably benefit from a level of detachment in terms of what you are doing. I try and remind myself that anytime I am frustrated, hell, I was frustrated with the market today after Trump opened his mouth, right? Genuinely speaking. But I'm constantly trying to remind myself, the moment I take a step back and I zoom out and I ask myself, am I going to be frustrated by this in 6 months? The honest answer, nope. It's not going to matter to me, right? It's not going to be a problem for everything that I am doing, right? The moment you detach, the moment you develop that superpower in terms of being able to zoom out and see things with a little bit of perspective, it is going to allow you to accept a little bit of imperfection in terms of how we approach this game, right? You're going to understand that mistakes are normal. We as human beings, we are going to experience emotions, and we're going to have off periods, whether that's because of the market or whether that's because of ourselves. They are always going to exist, right? In my experience, professional trading isn't always clean, but the one thing professionals do very, very well over time is they control and they manage risk. So even when performance is not clean, they're not putting themselves in a state where it's very difficult to bounce back and recover from. Yes, they might have moments in time where they slip up. Yes, maybe they'll lose a little bit more than planned. But a true professional should not hit the stage where they're losing, 20, 30, 50, 60, 80, 100% of their account all in one fell swoop. That's just poor risk management, right? As much as you can help it, you want to be working to avoid those moments in time. And that's the only thing that's going to keep you in this game in the long run. I can honestly tell you, and this is not something that I think I naturally struggled with in my early days. And again, I always try and keep things transparent as possible. The one thing that I did very, very well at the start of my journey was I prioritized risk management. I don't know why. I don't know why I cared so much about it in my early days. I don't know where that inherent, feeling or thought came from. But I never risked an amount that would allow me to have this one big blow up moment. And it meant that for the majority of my early days, where I made loads of silly mistakes and struggled immensely to find my edge in the market, I found that actually those mistakes were a lot more bearable because of the fact that I could bounce back and I could recover from them. That's the position that most people, they underestimate how important that moment is, right? The moment where you can understand that you take that step back, you zoom out, you accept that times are going to be imperfect. If you haven't done your best to manage risk during that time, it doesn't matter how good your mindset is, it's going to be a struggle to come back, right? I've heard countless stories of people that have lost a crazy amount of money and just never recovered psychologically and just disappeared into the distance, and you never hear from them again, right? There was one notable trader. I've been talking about this a lot over the last 1 month or so. There was a trader that I used to follow on a forum way back when, and they used to share a MyFX book, and they were somebody that traded, I believe I watched them somewhere for the period of like 12 to 18 months or so, and they made phenomenal returns. I'm talking they returned hundreds of percentages during that 12 to 18 month period. Very consistent equity curve over time. And then it stopped. We hit one day where I logged in and I checked their MyFX book, and they experienced a 97% drawdown in one day. And that for me was like, it was a moment in time where I got to learn such a valuable lesson without having to experience it myself. I was so invested, and actually, in all honesty, at that point, I was inspired at seeing what could be possible by trading and investing and the power of compounding over time, and watching this person grow a significant size account by, like I said, hundreds of percent over that time to only lose 97% in one day. It was a very humble lesson in risk management. And that's something that I always prioritized from very, very early on, right? The one thing I do want to say, and I kind of want to wind this section down on in terms of mindset, is I think before you go back to trading, after you've detached, after you've had that moment of perspective where you could zoom out, after you have accepted that imperfection is a normal part of this game, the first thing that you need to focus on in terms of objectives is you need to understand that the immediate goal is not to make your money back. That's not the drawdown that you should be focused on first and foremost. I would argue that the first point of call should actually be to regain mental clarity. I always like to more poetically put it that the first drawdown that you need to recover from is the mental one, not the financial one. And it's the mental one which is what usually kills people over time. It's the one that they carry forward from the first loss into the second, and the second into the third. And this is something that most people don't put enough emphasis on, right? Your job is not to immediately focus on making money back. It's to recover your clarity of mind so that you can make good quality decisions, so that one small mistake, one issue, one period of underperformance doesn't continue on past that one moment in time. The goal is not to let it compound. And that was, all of this was my first point of call at the end of last month. Detach, zoom out, accept imperfection exists, and then immediately reset my objectives. Understand the goal is not to immediately make it all back. It's to get my headspace back in the right place. Because I truly believe when you've got your clarity of mind back, when you can think and act clearly going forward, then actually making your money back becomes a much easier process. It should just become a byproduct of executing everything that your plan determines day in and day out. And I'm not saying it's easy by any means. I know all too well how difficult this mental side of things can be. But if you give yourself a protocol, if you give yourself these steps, if you break things down into chunks and just focus on completing one step at a time, then actually recovery becomes very, very achievable. And I say that from my experience. I've been in that place where I have made mistakes before, and I've used a protocol like this, exactly like I did last month, to be able to recover and start the bounce back, at least from a mental perspective. Okay. What we add to this is the practical, the strategic side of things, right? And there's going to be an overlap as part of some of these steps and these processes, but it's very good to have a plan of what to do strategically in both situations, because again, when we're thinking about the full, well-rounded recovery of how we survive and prioritize longevity in this game, I believe you need a little bit of both, right? Step number one in terms of a strategic recovery framework starts in very much the same way. Pause. Take a step back. Actually, just catch your breath. Don't be so focused on immediately trying to make that money back simply because you did not like the outcome of the last trade. There is a massive benefit in just taking a step away from the charts, doing a little bit of breath work, breathing, going out, touching grass, taking a walk, exercising. All of these things can do wonders in terms of your mentality, and that's going to help to interrupt and add time between your last trade and your next one. That aspect of time is very, very important. Something that I like to share from a purely psychological perspective. There's a great psychologist called Daniel Kahneman. He wrote a book that maybe some of you are familiar with called Thinking Fast and Slow. It's nothing to do with trading, but at the same time, it's everything to do with trading, right? It's actually nothing to do with the financial markets. But when you understand the psychology of what he explained inside of that book, you will understand the impact that it has on your ability to make good quality decisions day in and day out. Inside of this book, he talks about the idea that every human mind operates in two ways. We have system one and system two. System one is our impulsive, reactive train of thought. It's the one that most people rely on as an immediate reaction to a certain situation. It's the exact reason why we are impulsive and emotional when certain things happen in the market. The flip side of this is system two. System two is the logical, the rational mind. It's the one that makes good quality decisions. And it's probably the one that's going to make the best decisions in terms of how you manage risk. The problem is it's slow. It's not always the first one to react. And the most surefire way to take you from system one to system two, time and perspective, right? And this is why, regardless of whether we're talking about mindset or whether we're talking about your strategic approach, they all start in the same way. They all start with a pause, because psychologically, you are improving the odds of you being able to make a decision based on system one versus actually making a logical one based on system two. And you can apply this in many areas of life. You're frustrated at a situation. Instead of sending that immediate email, wait some time, type it up exactly what what you're feeling in that moment, but give it an hour, give it 24 hours, and then look back and ask yourself, is this still the most logical thing to happen? Because what most people will experience in that situation is I'm sure you watching this at some point in time, you would have been in an argument, you would have said something in the heat of the moment, and only with a little bit of time away, you'd look back on that moment and be like, damn, shouldn't have said that. One step too far, right? Nothing has changed. The argument, the thing that annoyed you was still exactly the same. The only thing that has changed is time and perspective. You can implement that exact same thing in your trading by just starting with a pause, right? Actually start by just asking yourself, is my mind clear in this moment, or am I reacting to exactly what happened prior to this, right? Once you've had that pause and that little bit of a breakaway, that time for your mind to switch from system 1 to system 2 to just improve the odds that you're making a good quality decision. Step number 2 is to give yourself some perspective with the action that you took. And you can do that simply by asking yourself, was my last trade actually a good one? Or was it a bad trade? Was it a good trade or a bad trade? And I'm not talking about in terms of outcome. I'm talking about in terms of your process. I'm talking about thinking about this in a way where you ask yourself, if I was to take this trade 100 times over into the future, am I more likely to make money than lose money? If you can't answer that, you probably should not be trading your current strategy. You need conviction and data to support the idea that as long as strategically I do this, this, and this, every time these conditions or this setup presents, I am more likely to make money rather than lose money. That's a very, very important thing to actually being able to think about, right? You need to be able to separate and understand that just because the outcome maybe hasn't been favorable in that moment, it doesn't mean that your behavior should be impulsive and immediately reactive to that situation. The pause should most definitely help you with that, but you want to be able to logically look at that situation and ask yourself, was it a good trade? Forget the outcome, forget the P&L. Was it a good trade? Did I have an edge in my favor? Was I stacking probability on my side? Because if it was, that will start to give you a little bit of perspective, right? You see what we're doing here? Introducing time in terms of the pause and actually determining whether the trade was good or bad to give you a little bit of perspective, right? The third thing that I think makes sense to do from a strategic perspective is actually to think about your exposure to the market when you decide to step back in, right? That might mean different things for different people. For some of you, that might mean trading a smaller position size. For some of you, that might mean reducing your trade frequency. For some of you, that might mean choosing to actually just take the rest of the month off and extend that breakaway because you need that clarity of mind. It's going to mean different things for different people when we talk about reducing exposure. And again, I'm saying this from the perspective of your time, your mind also needs time to recover from situations that it has experienced. Even if you can talk yourself into saying that I am disciplined, I am going to do the right things, this condition is A+, if your mind is not in the right headspace, reducing your exposure can be very beneficial for you, right? So you have to understand that sometimes your mind is going to take time to recover from these moments, and therefore prioritizing either trading a smaller position size or reducing that frequency. And I'm thinking specifically the latter here for those of you that are maybe short-term traders, scalpers, ones that are maybe getting in and out of the market. Maybe you want to focus on, instead of giving yourself an allowable 2, 3, 4, 5 trades a day, maybe you want to focus on the idea that actually I want to take the best 1 or 2 trades and then be done. I don't want to allow my mind to experience a certain level of stress again because I already realize it's taken a beating with everything that has happened so far, right? When your clarity of mind has dropped for any reason, whether it's your fault, whether it's the market conditions, whether it's a mixture of both, your risk in terms of your exposure, and again, that can be in position size or frequency, I think it makes sense to reduce that at the same time. I always find, and I think something that a lot of traders tend to struggle with, is just because there is an A plus opportunity setting up in the markets, if you don't have also an A plus mindset to accompany that, the chances are you're probably going to screw it up anyway. Whether it's your entry, your trade management, your position size, your exit, you'll find a way to mess that up. And that will only compound that bad behavior over time, and you'll kick yourself twice as hard. And it makes the recovery process even more difficult going forward. Okay, so pause, assess whether it was actually a good or bad action that you took specifically. Before you think about getting back into the markets, reduce that exposure going back in. Step number 4, I would say, is go back to your journals. What did you feel? What triggered that event or that situation? What should I be doing next in alignment with my plan? All of these things help to build awareness over time. And awareness is what most people are truly lacking in, right? I don't believe I'm an amazingly, superior trader to most people because I possess some superhuman ability to read the markets. I would actually argue the opposite. My technical and strategic ability is probably mediocre at very best. The reason I have confidence that I will do well over time, and that might be weeks, months, maybe even years. I have had periods of time where I have back tested and lost money over the space of an entire year. So I'm completely mindful that it is possible. But the thing that I am very, very mindful of is my awareness is at a level where I will very often be able to catch myself so that small mistakes will never compound into big mistakes. And that's what will keep me alive in the long run. And that's what your journals will be able to help you to do over time. They will get you to recognize patterns of behavior. They'll get you to recognize the thoughts and the emotions that may still be lingering from previous situations that you need to be able to leave behind instead of carry with you like baggage into the next decision going forward, right? The last and final step is to actually build your confidence back up by actually getting back involved in the market when your plan tells you to do so. And I can assure you of this, and I say this again because I've been through many of these moments. After you've had a setback, when you've made a mistake, when you've kicked yourself for that moment in time, when you know you could have been better, or simply when, like I said, market conditions mainly just suck at that point in time, you have to understand that the one thing you have to focus on is being aware that maybe you are not in the optimal state or haven't been in the optimal state. But the thing that's going to give you the best confidence in getting back into the game is just focusing on doing what you do best, right? Executing your plan in alignment with what you should be doing. Just focus on simple, clean trades that align with what you're doing. You don't need to force, you don't need to chase. Those are only going to amplify and, spiral the previous actions that you may have taken. You just have to rebuild trust back in not just your system, not just your process, but just yourself, right? Reducing that exposure plus giving yourself that ability to get back into the game can be a very good combination to allow you to ease yourself back into things over time, right? And that again, I think is an area that most people tend to ignore or overlook by the large means of what I tend to experience and what I talk to a lot of traders about, right? So as we start to wind this session down, I think the big things that I want to emphasize through what I've talked about today is that a lot of the mental clarity that you are specifically looking for in your trading, it's really going to come from detachment. I think a lot of people, and the most obvious thing to do when you're going through a difficult moment in time is your natural desire is going to want to be to spend more time on the charts or more time overthinking and overanalyzing. I find clarity comes from distance, and taking those few days to take a step back, both psychologically and strategically, and easing myself back into the process, it's been the best thing for my clarity. And I can honestly say the clarity that I have had in the last at least 2 or 3 weeks I feel like it's been the most that I've had in the last few months of my trading. And it hasn't come because of some big breakthrough and revelation in terms of my strategy or, some understanding in terms of my market conditions. It has purely come because I forced myself to take that step back and give myself some space and perspective from the market. I truly believe in the idea that walking away for a day, a week, maybe even the remainder of the month, if you really feel like this period has taken a toll on you, you have to understand that distance is going to be the best point of call for you, right? And again, that how you create that distance and what you do during that time is going to be something that I think most people should try and experiment with to see what gives them the most perspective. For me, I either like doing a hard workout or going for a walk. Just something getting outdoors and away from what happens on the charts is always a great way to just give me some perspective and, allow the cortisol that's running through my body to just calm down a little bit to get to a more manageable level going forward. I think a little bit of break, removing those charts, giving yourself some time to reflect without any pressure whatsoever is going to be the best thing for most people. I find it very, very difficult to fix a very reactive state whilst you're still in that moment, right? It's like you ever told somebody that's absolutely like boiling over with anger or frustration, just calm down. Do you think it does any benefit for them in that moment? The majority of the time, it simply makes the situation worse. What you need is just time and space. Give yourself that perspective. Give yourself that opportunity to actually bounce back in a good way, both psychologically and strategically, and prioritize that zoomed out long-term approach as part of everything you're doing. I can promise you everything that you guys are working towards here in terms of Darwinex, in terms of creating your track record, in terms of longevity over time, it will not come without a mistake, a slip up, a period of hardship. Something in some way, shape, or form is going to throw you off track. If you don't truly know how to deal with that moment, it is going to completely send you on a spiral, and one bad day will turn into a complete blow up, which will be almost impossible to recover from. I always give people the perspective of like, if you lose 50% of your account, you need to make 100% return just to get back to break even, right? I'm not saying that's impossible to do, but psychologically, that is a task which most people would struggle with. To double your account just to get back to break even, psychologically is almost impossible for a lot of people. And so that's something that I want you guys to be able to keep in mind for how you go about approaching this game. Okay. So final message to you guys, and something that I want you guys to, to really keep in mind that I hope I've ingrained well enough over the space of today. Mistakes are undoubtedly going to happen. You're going to have entire periods of time where you're going to feel off. You're going to have periods where you are going to be frustrated because of something maybe you have done or something that you have very little control over. The biggest question about that moment is not avoiding it and figuring out how to never allow it to happen again, because I truly believe it's going to happen out of your control in a lot of occasions, but simply asking yourself, how good can you get at getting back to a point of clarity? How quickly can you return to a state of what I like to call equilibrium, a place of balance where you're not feeling too high and equally you're not feeling too low? That's something that you really need to think about and prioritize if you want to really emphasize longevity in this game. Okay? It's not the mistake, it's the response that defines you. If you can take anything from this session, understand that one of the biggest keys to longevity is all about not allowing losses to compound over time. Leave them in the moment. Let them just be one small data point over time. The moment you can focus on understanding that your recovery process starts with detachment and not immediate action, the closer you get to finding longevity and hitting all the goals and things that you are working towards in the long run. I don't believe in overnight success, But I do believe in having an approach that keeps you in the game long enough so that you can achieve them over time. And I think for everything that you're working towards here, that has got to be one of the key things that you remember as part of your very long track record ahead of you over time. Okay. CK says, this is straight facts. Walking away from trading for at least a few days has been so good for me. And you know what? Honestly speaking, it's something that most retail traders just generally suck at. And it's so ironic because most of us, you ask most retail traders why they are in this game, and they'll respond with one of two things: money or freedom. And ironically, we give ourselves a lack of freedom by never taking a break away from the charts. And as a result of not giving ourselves that break in detachment, we often make less money, right? Everything that you want is truly found on the other side of a little bit of space and a little bit of detachment over time. But just most people struggle to see that for what it is in the moment. So I completely agree with you. I resonate with that a lot. And again, it's one that I definitely lived through towards the end of February going into March as well. So yeah, completely resonate and agree with you. Right. That is all for today's session. As I mentioned, this is the last one of our series. I hope you guys have really enjoyed this over time. The content will remain online for you guys to watch back at any point in time. If you're watching this and it is your very first session here, make sure you hop onto the YouTube, go back through the live sessions that we've done, and actually have a look at some of the previous topics that we've covered. We've spoken about a variety of different things in terms of emotions, mental clarity, dealing with drawdown, understanding why winning is hard, prioritizing the long game. I actually talked you guys through an end of year performance that I did, which I think was probably one of my favorite sessions to share with you guys. But it is all on YouTube for you guys to enjoy and watch back at your own time and your own leisure. Before we wrap this session up, if there are any questions, I'm going to keep this open for 30, 60 seconds or so for anyone to type a question in there that you want to run by me at all. Otherwise, I will leave you guys to enjoy the remainder of your day. And I will obviously look forward to connecting with you guys in the future. CK says, thank you for this. You are a great speaker. Thank you. That means a lot to me. It's something that I'm working on doing a lot better at. But I appreciate the kind comments, and I'm glad you enjoyed today's session. Okay. I haven't seen any other comments or questions. I think we will call it a day here. As I said, make sure you check out the remainder of the previous content, which is going to be online for you guys to watch back at any point in time. If you guys want to follow my journey, you can find me on most social media platforms at Trading in the Now. And yeah, I like I said, I like to try and keep this journey as raw and as transparent as possible. And that is always the message that I want to share with you guys. It is never about perfection and, glamorizing what this space is like. For me, it's always about realism and just working to be better and be as consistent as possible. I think that's what all of us can strive for in the long run. Thank you guys all so much. For anyone that has tuned into these over the many months that we have been running these, it has truly been a pleasure to be able to present for you guys. Massive thank you for the entire team at Darwinex for giving me this opportunity to speak for you all. It has been an absolute pleasure. I'm sure we will cross paths again in the future. For now, that is all for today and for this series. I hope you all have an amazing and disciplined week ahead, and I will speak to you again soon. Take care, my friends.